If you look at a chart of it, it looks absolutely explosive, but we still believe there is room to run.
Small stocks just starting to take off.
That move to $10 would be close to 200% on the underlying stock here.
Graham Lindman with Prosperity Pub shares a list of 3 growth stocks under $20 that could be your next explosive growth story.
Up 872%, which, full transparency, is one of our biggest winners.
3 smaller companies in 3 totally different sectors that all have one thing in common: serious upside ahead. Graham, so great to have you on the show. We are excited for some unique stock picks that you have for us today. Everyone in the market is looking for growth right now, and there is a lot of it happening. So many stocks are up right now. Where do you look to find maybe some of those names that other people might not be watching?
Yeah, well, right now, obviously, the big topics in the news are artificial intelligence and all sorts of tech stocks going crazy. One thing that's been sort of overlooked for a while until this last month are the formerly known as Bitcoin miner stocks, now turned data centers for these big AI companies. We've traded things like Cypher, Iron, CLSK on their runs up. There is one ticker right now that's still trading under $4. We picked it up about $2 a share, but this one we have targets on for $10. It's one that's really not making a lot of news right now, but it did make that same shift in their business model from Bitcoin miner to then data center, hoping to ink some big contracts with your NVIDIAs and other big AI stocks of the world.
Excited to hear this one. You know, we've on this channel talked about Applied Digital many times. There's a lot of our viewers who got in very early on that. So kind of a similar concept at one of the many companies that's doing that right now. Let's get to that first name on your list of 3 growth stocks under $20 right now. What's the first company?
Yeah, the first one is Bitfarms. Ticker is BITF. Again, this one is seeing that same sort of squeeze play that we saw with your tickers like Iron, CLSK, and Cypher, which we traded. We actually did it on this show. We did Cypher together, and that one really pumped and did really well. It's still going nicely, but this one has been lagging behind in the sense that it just has not made the headlines just yet. Now, if you look at a chart of it, it looks absolutely explosive. It's gone up and to the right, but we still believe there is room to run. We've actually, using the same models we used on Cypher and Iron, we actually predict that this one could touch $10 here before the end of the year. So it's still trading under $4 right now. It's about $3.50 a share. So that move to $10 would be close to 200% on the underlying stock here. And if things keep heating up, which we expect with the AI arms race, you know, the CapEx going through the roof on many of those large tech companies, BITF, we believe it's just a matter of time before this one is the next one in the headlines where you're reading it online and everybody's wondering what the heck happened. And hopefully we were in early and along for that ride.
I want to talk about a word of caution for investors out there. Again, if you're looking for growth, you know you have to expect some volatility. But these Bitcoin mining companies turned hopeful data center companies, is there some risk out there just because there are a number of companies doing that right now? Or is there enough room in the market for all of them to do well?
There's always risk when it comes to investing. I think the biggest risk right now is any name like Meta or NVIDIA or anyone, Microsoft, Apple, slowing spending. If we start to hear from those big companies that, hey, we're worried about the future, we're going to pull back some of our spending right now, that's where these stocks are really going to hurt. But I don't think we're there just yet. Those stocks are the large cap stocks are loaded up on cash over the last few years, and nobody is going to let another company beat them in this AI arms race. Actually, Mark Zuckerberg said it just the other week. He said he would rather go bankrupt than miss out on being the top AI stock. So I think we still have a lot of room to run here, and that's why I'm so bullish on a stock like BITF, very similar to what we did on Cypher and CLSK.
This is the kind of stock you are trading every day, and I know you have a way for our viewers, if you're interested in learning how to trade these unique stocks. Graham and his team have a free way you can do that. It's called Dollar Options. You can scan the QR code now or click the link in the description to learn more about how to trade these unique stocks using options with Graham and his team at the New Money Crew. All right, Graham, let's move on to the second growth stock you have for us today.
Yeah, the next one for you guys is actually a gold mining stock. And that's not a stock that, everyone's been talking about for the last 10 years in a row. They've been pretty quiet But we're seeing a lot of the gold miners really pick up steam. The one I wanted to point you guys to right now is ticker CDE. It's doubled since August already. But the crazy thing is now with gold over $4,000 per ounce as of today, the profit margins on these gold miners are through the roof. If you actually price out their profits that they're raking in right now compared to the past, these stock prices are not even close to reflecting where they are at. They are still grossly undervalued. So that's why I like CDE right now, as well as many of the other gold miners.
And definitely a growth opportunity for investors. But we talked about gold just yesterday on the channel too, talking about how high this is and how it's something that investors can't really ignore anymore. There's some investors who are like gold, they're in it already, but there's plenty of retail investors who avoid it. They don't want anything to do with gold. Is this something you can ignore right now, Graham?
I don't think so. We actually had a class the other day where I just pulled the historical numbers on how gold typically performs in super cycles. Right now, this is the third time since 1970 that the gold relative strength has beat the S&P. It's gone above zero on a relative strength basis. Each of the times before that, gold has gone up 500% over the next decade. 500%. So yes, people look at gold right now and say it's crazy. They looked at gold at 3,000 and said it's crazy. We are only about 150% up on this gold super cycle. The average one is 500%. So there is a ton more room for growth here. We actually just pulled that data from the past to then give us an idea of where we could wrap up here by this time next year. And the models have us at $5,200 an ounce by Christmas next year. So these gold miners who are going to see increased profit margins on the increasing price of gold should really, really do well.
Such an interesting topic. I like looking at the history too. That helps a lot. It gives investors kind of a roadmap of where things could go. And I know you said you're bullish on many gold stocks. This is just one ticker of several different gold stocks that you would be looking into right now.
That's correct. And you can go buy gold, you can go buy GLD. And again, we would expect around 20 to 25% returns over the next year here on GLD. But these miners are going to see much bigger returns if it all works out. Of course, there's risk. It could not work out. I could be totally wrong. But if I'm right, we could see a ticker like CDE double over the next year.
Well, good. Another risky but interesting growth play for sure. Let's get to that third company that you have for us, Graham. This is a totally different sector to look at too.
Last up for you guys, I have Rocket Mortgage, ticker RKT. This is one that we've been actively trading. On this recent run up, we first got in at $12. It ran all the way to $21. We traded in and out all the way up. The reasoning behind this, it's twofold. Number one, we know that interest rates are coming down, whether it's from the White House kind of twisting some arms. We're going to have a new Fed chairman here in the spring, and we did have that first rate cut. So what happens in interest rate cut cycles will typically twofold benefit for real estate. Number one, when interest rates are lower, ideally, more people are going out buying houses. We get a little more traction in the mortgage market for a company like Rocket. But secondarily, and this is slightly overlooked right now, is because interest rates have been so high over the last 3 years, we're going to see a ton of refinances coming in here over the next 3 to 6 months. And that's why a company like Rocket, who's way ahead of the game when it comes to refinances, they're actually the number one right now in the world, I think is going to do extraordinarily well. Now, the reason I bring it up today isn't because, we bought it at 12, it went to 21. We're not saying buy it here at the top. We're actually getting a pullback right now. A little scare in the housing market where people are now starting to second guess, hey, is housing actually going to do good or not over the next year? So we've seen Rocket fall from $21 down to about 16 today. So we've got a nice little opportunity here to jump in at a discount. It's just a natural swing in this kind of explosive cycle for Rocket. But based on our profit targets, our high-end target for Rocket over the next year is $35 a share, which is a little over a double from here.
Yeah, that's a lot of growth ahead for it, but it really does hinge on that housing market doing well and the refinance happening. We've only seen a very small rate cut so far, but in that environment, how much of a rate cut and how much of a change in the mortgage market would it take before we start to see those refinances that you're talking about? Because I think that's a really good point. There could be a lot of refinances happening, but how much of a rate change would we have to see before that starts to happen?
In the mortgage world, the typical rule of thumb is you want to see your interest rate drop by 1% to refinance. We did see a record number or recent record number of refinances over the last month already happened just off that quarter point cut. The reason that I think that this is really going to pick up steam is because the whole situation we have going on with the Fed in the spring, where we're going to see a new chairman who I think is going to be sort of cherry picked to do what the White House wants, which is to bring rates down, to be a leading economy as far as low rates, leading in that front. So I think, assuming inflation doesn't immediately pick back up, assuming we can get those rates to drop 2%, maybe more on just a mortgage rate basis, that's where this thing's going to go crazy.
Yeah, really interesting company and good timing for this too. If you agree that the housing market could see a turnaround, I think this is a unique time to look at this company right now. So another good stock pick. Graham, I know you're giving us kind of some long-term picks for our retail investors to look at, but you are looking at a lot of these companies for options too. Talk about what you and your team normally do every day.
Yeah, well, each and every day, 10 a.m., we do a live trade room. We actually do one at 10 a.m. Eastern, and then we close the day up at 3:30 p.m. Eastern. We go live both times, and we're just looking for opportunities like these here. We'll use momentum, we'll use seasonality, we'll use price action, we'll even use a lot of weekly charts. It's one of our little key insights that we like to trade, and then we just layer on options for additional opportunities. Actually, we talked about BITF here at the beginning. We actually just played CLSK, which is kind of a sister company, on it a few weeks back with the options. I've got them open right now, up 872%, which, full transparency, is one of our biggest winners of the year. But that's the kind of growth we're able to see when we're right. When we're right, we can get some really, really awesome returns on these stocks by just picking the right options and timing it up.
So interesting. One more piece of advice I'm looking for investors is a lot of this is when we're right and it should do this and we hope it'll do that. How much of your capital do you normally put into these types of investments versus maybe more solid, steady plays? When you're looking at a growth investing, how much of your capital should be going into these kinds of investments?
That's a great question. So typically my stock portfolio, about 95 to 97% of my money is in stocks, not in options, not winging it, swinging for the fences. However, probably 20% of that portfolio is in the riskier stocks, like Rocket or BITF or these gold miners we're talking about. About half my count's in the S&P and NASDAQ, and then about 30% there is in the mega caps, which I love right now. I think we're going to get a sweet run up, nuclear stocks as well. But then I use that other 3 to 5% for trading. So I'm not risking everything on an options play, hoping for the best. And if it goes to zero, I'm broke. No, it's a much smaller account that I use on trading. But by doing that, we're able to target, $500 here, $1,000 there, just on the side, and have a lot of fun doing it as well.
Graham, such great advice for investors out there. Again, if you want to learn more from Graham and get some more of his daily trades ideas, really great returns on a lot of those, like you just shared. You can, again, scan that QR code right now or click the link into the description of this video. It's a free chance to get a look at what Graham is doing every day, and so much great knowledge for our viewers today. Graham, thanks again for your time.
Yeah, thank you so much.
And let us know what you think in the comments. Are you looking into any gold mining companies right now? Are you looking at any of these Bitcoin turned data center stocks? I'd love to hear from you in the comments. As always, everyone, happy investing.